price wedges or ending diagonals. These are doubles or triples that end in a diagonal pattern. They're reversal patterns, and they often form after the market has moved or had really big price moves. So basically they're showing that the market has moved too far too fast. Now this is a pretty common pattern in technical analysis circles, so you've probably heard of it before, price wedges. But it's also very noticeable for divergence traders, especially if you're trading divergence and you're trying to enter early into the divergence setups, because this is often, if you're trying to enter very quickly after you see a divergence develop, this might be a reason or one of the patterns that causes those trades to fail. That's because one of the noticeable characteristics of these patterns is that the extreme peaks will often diverge with a momentum indicator all the way through the cycle. And we'll take a look at that here in a moment. But that's also, it's very good for us because it helps us to find these patterns and be able to identify these patterns ahead of time, because of the fact that they often diverge all the way through. Okay, and then the correction that follows, the higher the low point of the wedge, is often the initial target of the corrective cycle, which is also common for any divergence, and we'll talk about that a little bit in the next slide. But first, let's go ahead and take a look at some wedges in the market. Here's an example of a wedge. By the way, this is we talked about this earlier in one of the earlier sections. We showed this this Euro US dollar divergence setup here that developed, and I said I would come back to it and just update everybody on this as we move through the course. But here you can see price moving higher, MACD swinging lower. We qualified here, had the pullback to the 50%. In this case, we were looking for price to move down to the 127, potentially towards this low. Still continuing here, so you can see how it's progressing along. Anyway, we'll come back to that again. But here's the focus where I want you to focus on right here. And this is an ending diagonal right here. See how we're moving in this diagonal manner, and all the way through it, look at from the beginning of it to the end of it, look at the divergence, look at the MACD. Okay, we diverged all the way through. Okay, this is a very common characteristic of an ending diagonal pattern or a wedge. Whatever you prefer to call it, we don't really care. We don't get hung up on that. And look at the price target. Look at where the correction targeted. Right back to the low. Correction came right back to the low point between the points that diverged and then continued higher. Let's go ahead and find another example. This is one we actually showed earlier. This was the 5-minute chart of the dollar yen. You see how we had a really big price move to the downside. Price moved in this diagonal manner. We diverged all the way through, and then we exited. Okay, so divergence all the way through, and then we exited. And look at the price target. Look where we targeted here initially, where it found some resistance. Now, obviously, this led into a deeper correction. However, the initial price target here where we found resistance was right there at the high. Price came up, targeted the high, pulled back, and then continued. Now, this is also another example here. Let me get rid of this. Another example here of a diagonal. Now, this is a 5-minute chart, so some intraday volatility came into play. Okay, and this is what we talk about, where that intraday volatility can mess with the patterns a little bit, especially when you're dealing with 5-minute charts, when you're dealing with these really small degrees. Okay, but notice the diagonal pattern and how price was diverging with the momentum indicator all the way through here, all the way through that pattern. Okay, and you can just, if you ignore that intraday spike that happened right here, you can see it. Okay, then initially, the target on this, price came down, found some support in this area, pulled back a little bit, then continued, and this was actually a larger reversal. that led eventually to much more downside here. Here is the weekly dollar yen. Okay, so a weekly chart. See the diagonal price action, the wedge or ending diagonal, and look at the momentum indicator. Look at our MACD. All the way through, we're diverging. All the way through these lows. Price reversed, rallied, and where did we find resistance? Okay, the initial resistance was right here at the high between the points that diverged. The beginning of our wedge or ending diagonal. And you can see here the market reacted by moving into a corrective triangle here. This is also an example of a very perfect contracting triangle. And even right now we have a very large wedge developing in the gold market. So let me go ahead and show that. Okay, so here's the current gold market. This is a daily chart. You see the potential wedge we have labeled here. You can see how we're moving diagonally to the downside, and we are diverging all the way through this. All the way through these new lows, we have divergence. Okay, so those are wedges or ending diagonals, and we will see a lot of those in our future trading.